Hi, I'm Daniel Oney with the Texas Real Estate Research Center at Texas A&M University. And I'm joined today by Lynn Krebs and Harold Hunt, two of the economists on our team. And we're here to talk about the 2025 real estate forecast. In particular, we're going to spend time today talking about what we call macro drivers. So the question is, what is a macro driver? Well, most people, when they think about real estate, they think about housing markets, or they think about retail or land. But as economists, what we spend a lot of time doing is thinking about the things that influence the supply and demand for those real estate assets. So today is a sort of a behind-the-scenes look at how the team did this forecast and what influenced our recommendations or comments about these different assets. So I'll give a brief introduction to each of my colleagues here. Lynn on our team primarily focuses on rural land and also property taxation. Harold is a bit of a utility infielder for the team. He does commercial real estate, manufactured housing, also covers oil and gas for us. So thanks for being here with me, gentlemen. And I guess I'll start out by asking, how do you approach forecasting? You cover a lot of different assets, and so what's the framework that you bring to it? What do you pay attention to when you're doing a real estate forecast?
Yeah, it's a great question. You know, over the years, we've looked at a number of different economic factors and try to figure out what corresponds and what helps us sort of predict the direction of real estate markets, in particular, in my case, rural land. And we have found that probably the most directly related exogenous factor is total Texas personal income, because that captures not only economic growth, of course, it's a function of total population growth as well as jobs and the incomes and the wage level and that kind of thing. So Texas total personal income growth is big, and of course also interest rates, the Fed funds rate, for example, and to a lesser extent the price of oil and gas. You know, West Texas intermediate crude price, for example.
So Lynn, you used a pretty big word there. You talked about exogenous variables.
Right.
So tell our practitioner audience what you mean by that.
Yeah, it's really just means external to the actual land sales data, for example. So, the really biggest predictor is what has happened in the most recent quarter. So we look at the prices, we look at the volume of sales, the total acres sold, that sort of thing. And then we want to know, like, okay, what are the things that help drive that, or maybe help predict where the market's going next? And so that would be an external factor like the ones I mentioned. Mm-hmm.
Okay, excellent. So Harold, what about you? What do you think about when you do a forecast?
I think the three things I look at are probably inflation, interest rates, and employment growth. And try to hone in on those probably more than anything. The one that seems to be in the news here lately is inflation. And it doesn't really look like it's going down like they had planned, so we'll see how that plays out. But it's definitely something worth watching.
Yeah, we need to dig into that in a little bit. So one of the things that we do, all of us go out on the road. We're talking to audiences all across the state. And for the benefit of our viewers, we're having this conversation on February 13th. But already we've talked to people. What are you hearing from real estate agents, from bankers, from other people that you've spent time with so far this year? How do they see the year?
Yeah, so we have definitely seen a change in attitude toward the market in the last several months. I think there was a lot of let's wait and see what direction maybe regulatory policy, tax policy, et cetera, would take. And what I'm hearing from realtors and brokers out in the field is that there is a definite pickup in activity that's manifesting itself in increased listings and increased showings, and even more recently, increased closings. So, we're starting to see that in the data. We started to see that in the fourth quarter data, and then we're hearing, more evidence of increasing activity so far this year as well.
Wow. So Harold, what are the stakeholders telling you?
I think the thing I've heard the most chatter about is insurance costs. It seems to be a big factor on the commercial side, how much they're going up. Property taxes as well is a concern, but the one that I hear more than anything is rising insurance costs.
Yeah, and on that point, I heard panel discussion of commercial real estate professionals say that while property tax expense came down with rate compression in the last year or two, all the savings was eaten up by increased insurance cost.
Yeah, that's right. Another comment I heard someone make about insurance was that we've seen big spikes in the property portion of the bill, but the casualty piece is also growing. Mm. So I want to dig into a couple of the metrics that you two mentioned when you look at your forecast. I mean, in particular, I mean, income drives so much. Consumer spending, the ability to buy a house. I mean, Lynn, what's your take on the income trends right now?
Yeah, so, the rate of growth in total Texas personal income was just off the charts in 21 and 22. A lot of that was, government intervention, direct transfer payments. So we saw that across, we saw it nationwide, and it showed up in Texas in a big way as well. And in fact, we were wondering or thinking that might sort of break our models, if you will. In other words, the rate of increase in total Texas personal income was so high that we thought, it wouldn't be a reliable indicator, at least for a period of time. But we were wrong. The model was right, and it continued to be a very good predictor of land markets. We saw not only rural land prices, but also home prices run up in a big way at the same time that we saw total personal income going up. And of course, Texas has been leading the way in both population growth and in job growth for a while now. That was particularly the case in 2022, 23, and to a lesser extent 24. But relative to other states, Texas still is a leader in that regard, and in many regards, in regards to good paying jobs. People are moving here for quality jobs. Two of the biggest metro areas in the state in regards to percentage growth of population have sort of skewed toward higher paying jobs, for example, in the financial sector and in other areas that have, that tend to help push up that total personal income.
I'm glad you talked about the demographic trends. I mean, that's one of the things that I pay a lot of attention to when I look at commercial markets. Often a person's decision to relocate depends on their job took them there, or they think they have a good prospect for finding a job. And I think that's motivated a lot of people's decision to come to Texas, and it's been led by a lot of this investment we've seen. And I had some hip pocket material on population trends. The state really did accelerate its population growth coming out of the COVID shutdowns in 2020. Right. And in our forecast this year, we think that's going to back off a little bit. And I think one of the reasons behind that is that housing is certainly more expensive in Texas, so we have a little bit of an affordability problem. We're still cheap compared to the coasts. We're a bargain compared to places like New York or California. But the other thing that I think to think about why it might be slowing down is just the change in the composition. So growing out of COVID, more than half of our population growth came from people moving to Texas from other states. But what's happened in recent years is now more than half of that growth, especially last year, came from international migration. And so there's a lot of questions about how that trend might change going forward, especially with some policies we're seeing coming out of Washington. So it's just something to consider as anybody that's doing real estate planning, if you're thinking about investments or purchases. So glad that we touched on that. Well, Harold, you did mention something that everybody's been thinking about, and that's inflation. So I knew we did get some new numbers out this week, so what can you tell us about that?
Yeah, it's actually good timing. The numbers came out yesterday and today, and they're higher than anticipated. If you look at CPI, it was expected to be about 2.9, and it came in at 3.0. And then I think the more worrisome one is probably a producer price index. It came in at 3.5. And so that's a worry for inputs to production, for anything that's sort of going to go through the pipeline to make the cost of goods more expensive.
So I guess I would, kind of recalling to our forecast, we did wonder, were we going to see an end to inflation? I think we had some skepticism. So at least those numbers don't look real promising right now. I wanted to get some of your insights about how, as a team, we pull together these different numbers. So if Harold's focusing on some metrics, Lynn, you're focusing on some, I've got some others, every other member of the team is bringing something to the table. I mean, I'd like you to share with the audience your perspective of the process that we use to make this forecast.
Yeah, so that's a good question. Obviously, we all have different data sets that we look at, all of which we share, but we pay particular attention to certain sets of data by market or by property type, and we look at the trends and the direction, and again, thinking about total Texas personal income, we look at the rate of change, and coming into this year, the rate of growth in total Texas personal income has been declining slightly. It's still running above 5%, which is very strong, a little bit above long-term average. And we think that that's going to continue to slow down a little bit before it picks up again, probably in the second half of the year. And that's just, taking into consideration what we're seeing in the market, what we're seeing in relation to expectations, which include things like not only the rate of inflation, but how that relates to the federal funds rate and interest rates, and how the bond market reacts, and just reading out of all those things, what the future may hold in economic terms. But Texas is still attracting a lot of quality businesses and jobs. So we think that Texas will continue to outpace the national economy to some degree. Generally runs about 1% higher than or hotter than the U.S. as a whole. That ebbs and flows, but we think that Texas will generally maintain a pace above the national average.
So, Lynn, do you think it's easier to be a real estate economist in Texas? You just get the ruler and keep drawing the line going up?
Well, there is a lot of stability in Texas, I think, in regards to the direction we've been heading. As I mentioned before, Texas is the fastest growing state, both in population and jobs. This is not a blip. It's something that's been consistent for some time, and I don't really see any reason why that would change. While the rate of growth may slow down, it's still very, very healthy growth, and the environment for businesses here in Texas is positive, and you see that with so many businesses relocating to Texas. In fact, Texas is now home to more than 10% of the Fortune 500 companies in the world.
So, Harold, you've been at the center quite a bit longer than Lynn and I. We're fairly recent arrivals, so you've seen the way the center's made the sausage for a long time. So what do you think about this new forecasting process?
Yeah, I think the more input, the better. I mean, we've got a group that sort of tosses their ideas in, and we kick them around and just give an opinion about whether give it weight or not. And I think it's a good process. Of course, I also look at outside forecasts as well, from economists, the Federal Reserve, banks. I mean, there's a lot out there on forecasting which is worth considering, and then when you put it all together, we come up with an answer.
Yeah, do you think we're pretty good about challenging each other, and we're sitting around the table that we're not afraid to
I hope we
call
are.
somebody out?
That's sort of the plan.
Okay. So any other last thoughts about this process and what our audience might want to take away from this conversation?
Well, one thing I would add is that any good forecast is, even though it's good, it's perishable. In other words, we look at the data as it comes in, and so that even when it comes down to a particular asset classification like rural land, for example, we not only have new data from the last quarter, but we also reconsider all the future inputs in regards to what's expected in the coming quarters. And so, it's important to refresh that quarterly, which I think you can maybe talk to a little bit more, but we'll continue to do that.
Harold, last thoughts?
Yeah, we'll see how it comes out at the end of the year and how close we were. That's always interesting to see what it actually ends up at versus what you thought it was. And then that helps us correct for next year.
Right, right. The proof is in the pudding. So, you know, as Lynn mentioned, a fresh forecast is the best forecast. And one of the things that the center is committed to doing is making sure that we do update this regularly. So the Texas real estate forecast for 2025 covers through the end of this calendar year, and that forecast will be updated each quarter, and that information will be made available on our website, and you can access that forecast and get information about the methodology that went into it, the things that we think influence the forecast, whether it's macro drivers or geopolitics, and then get the results for each of the asset classes that the Real Estate Center addresses. So we hope you'll take advantage of that resource and then come back again and again this year and see how it's performing. So thanks for your time.